financing terms?
Just 12 months.
Oh, 12 months.
Yeah.
Is there a premium on that?
What do you mean?
Like over the cash price?
Yeah, so I put like a 15% interest rate on it.
Okay.
Yeah.
Not bad, man. Not bad. What's up, Colton? We got a new face in the group today. How are you, man? Oh, I think you might be muted.
Go.
There we go.
What's going on, guys? Nice to meet everybody.
This is
Sumner, how you
Colton,
doing?
newest member. We've had a handful of members that have joined in the last few weeks that don't seem to join the calls. But Colton, happy to have you on today's call. So what we're going to use this call for, we'll let everyone else trickle in as they do, but we'll get started on it. So last week we had Mayor come on and talk about double closings. What do you guys think? Do you guys like that? Rylan says thumbs up.
Yeah, I liked it. I watched the recording.
Liked it. Is anyone taking action on that stuff, or is that just something that you're just happy to noodle on, or has anyone kind of gotten the ball rolling there?
Mayor and I have 3 deals going right now that we partnered on.
Yes, that's great. So what
Michael's
do
doing
those
it right
deals
now,
look
too.
like? If you wouldn't mind just kind of touching on those briefly.
It would, if we sold all of them, it would be a revenue of probably 200,000 in property. So wait, no. So it's 52,000, another 52,000. So that's 104,000, and then the other one's 75,000. So like 100.
Is that purchase price or list price?
List price.
List price.
And then they're all like doubles and triples.
Solid, man. That's right. And the reason you're not closing on them is, I mean, it sounds like the spreads are pretty good. You just were cautious in those markets, or they have some hair on them. What's the reason behind not closing?
It's hard to tell on those. Like, it's just not sufficient comps. And like, one of them had that weird neighbor that like had encroachments on the property and was like pulling from the spring. And then another one is like, we just don't really know what it's worth. But
yeah.
And those are all properties you say you're doing double closes on, like you're not actually purchasing the property?
Correct.
Yeah, so Colton, just to fill you in, we're not releasing this call on our YouTube channel, but it's in the course if you want to go take a look at it. So last week we had this guy Mayor come on. Super cool dude. He's actually in the Slack group if you ever want to talk to him. But he has only done double closings. I think in the last year he did like, I want to say about $500,000 in profit from double closings. He's done like, I think some assignments, double closings. What was the third strategy he mentioned?
Novation agreement.
What?
Novation agreement.
Yeah, novation agreements, which is like a house wholesaler thing that is typically used, rarely used in land. So one of the things he offered though is like, hey, if you've got deals that are in your CRM that you just don't know what to do with, he'll JV. You guys will do 50-50 on the proceeds, and he'll walk you through his process. Because there's like I've done some double closings in the past, some that just fell through and we didn't execute on the agreement, couldn't find a buyer. And we had one really sick double closing where we had it like we bought it for like 25K and double closed on it for like 65K or something like that. It was a crazy deal. Should have just closed on it, honestly. It was way too risky. I was like managing the seller's expectations and he was losing his mind, but we made it all work. But it left a kind of a bad taste in my mouth. I just didn't like that experience. So he's got some kind of nifty tricks in terms of how he sets it up, how he sets the expectations with the sellers, how he continues to follow up with them. So like while they're under the agreement, I think one of the biggest risks that you run into is that they're not clear on the expectations. So 2 weeks in, they're like, wait, how come I haven't got my check yet? Or they get an offer from someone else, or they just change their mind, right? And like that's always scared me. So I've always been on like, let me just get my name on title. I don't want to have to deal with that type stuff. But he's got some pretty interesting systems set up in terms of how he's able to set expectations initially and then follow up continuously with them throughout the process to kind of keep them in the know. And then he actually lists all of his properties on the MLS, even though he doesn't hold title, which I knew that there were some states where you could get away with that. I thought it was just a state by state thing. He says as long as it's in your contract, you can actually get away with it. You'll just have to show the contract to the flat fee MLS broker. We all use this guy. His name's Jack over at Brokerless. And so he's kind of like set the frame with him too. And so Jack's aware. So I just think that like anytime you're breaking into a new strategy, you could go pay some really expensive lessons by figuring it out yourself. Or I'm like, I will give that guy 50% of the proceeds if he shows me the ropes for sure. It's a great deal. So I've been kind of aggregating a list in our CRM of just dead leads or leads that just didn't really make sense. I'm going to pass off to him. But it sounds like Rylan already did that, which is sweet. And that's like, we're so set in our ways. Like my business and most of people's businesses here, it's a conveyor belt, right? Like you put it on and it just goes through that process and you don't really differentiate. And as you start implementing these new strategies, it's really nice because you can unlock new revenue that's just sitting in your CRM. But again, I was a little too gun shy to do it on my own. So I'm going to pass it off to him. But yeah, if anyone does have deals here that are in their pipeline that you don't know what to do with, not a bad idea. Ryan, I'm curious how you went about, or if you've done it yet, in terms of going back and getting a new contract that kind of outlines that. Have you done that?
Oh, that was funny.
Bro, so awkward.
So I was like, I called Mayor up. I'm like, Mayor, I don't know how this is gonna happen. Like, this is gonna be some like salesman, I don't know, expertise. So I'm like, all right, we're both gonna go on this call, and Mayor was like, all right, I'm gonna take it over. I'll figure it out. And it was just like, he killed it. And basically, like, there's this one lady who was like, you guys are flipping my land or something. And Mayor's like, we're going to buy it. Like, we're going to give you a $500 earnest money deposit and all this stuff. So I think what really sets the contract in place and really sells the seller on that contract is the earnest money. So like if they feel weary of what you're doing, just tell them you're going to give them earnest money. And it's like, oh, well, if you end up buying it or having a bad deal and you can't sell it in that amount of time, it's just like, I don't know.
Yeah, cost of doing business. It's a meager cost. I mean, $500. Are you guys sending that off to escrow to hold their earnest money, or are you just going to send them a check?
Yeah, it's going to escrow.
Go to escrow.
Yeah.
What is the time frame that you're using, or how long do you have to market the property?
3 months.
Yeah.
3 months.
Yeah.
What we used in the past as well.
Yeah. And it's such a safe strategy, especially right now, like going into winter too.
Mm-hmm.
It's like, if you had a good property and you bought and sold it, you would do that in 3 months. So like, if you can't make this happen in 3 months, it would have been a bad purchase anyways.
Yeah.
So,
Mm-hmm.
I mean, if you're not confident in the deal, double close it for sure.
Yeah. Yeah, dude, it's so interesting. I mean, for me, I look at it like it's a tool in the tool belt. I would not want to make this my sole business. Same thing with like when people are like, I'm just a cash seller, I'm just an owner finance seller. It's like, these are all tools that we can utilize. They've got an appropriate time to be leveraged. But I mean, like, I go through my CRM, I'm like, dude, there's probably, no joke, probably $500,000 of potential just sitting there that I could go unlock. Now, I don't have the time to call all these people up and kind of walk them through the process, but coaching my team up on how to do it, I think it's a worthwhile thing to do. And like, we actually just got a deal that came in today, and this is, oh God, it's just teetering on that line where I'm just like, I don't know. So it's 17 acres out in Texas. We initially offered as a range offer. We offered between 68,000 and 95,000. We looked at the property. It's got about 100 feet or so of like an easement road that's kind of it's not great. It's just a dirt road. It's not terrible. It's right off of a main county road. And so we kind of walked them down and said, hey, like 95 is way too high. We'd be closer to 70. They're at 80. I really want it at 70. And so there's like 3 lots up. It's like a big row of like what was probably, I don't know, 100 acres or so that they just chopped up into these 17-acre increments. And so a lot that's 2 or 3 lots up sold for 150,000 in August. It does have a really small, shitty hunting cabin on it. I don't think it adds a ton of value. Then it does have like a gate on it. Like, it's got some real improvements where I think ours would probably be listed at like 130, maybe 120. Great double close candidate. I mean, there's like a healthy spread there. And even at 70, I'm like, I would probably just close on that myself. I'd buy something for 70 and sell for 130 all day long. But we just have so many deals like that kind of fall into that wheelhouse. Now, I think with like the smaller stuff, like the stuff where you're going to make $4,000 on it, I don't think it's worth the brain damage they have to go through of like talking to the seller, marketing the property, talking to flat fee MLS people, managing expectations. I think there has to be a threshold of what justifies here. And it sounds like that's kind of like the iteration that Mayor went through. Like, he was initially doing any and every deal, and then eventually just said like, hey, there's a threshold in terms of what the spread has to be as a minimum. I think one of the other interesting things about this too is like when you're going into new markets, right? Especially if you're working in like a non-disclosure state like Texas, like where we have this. I mean, we were able to backtrack and figure out the comps on it. There's some strategies you can use to do that, but in a lot of cases, you're kind of firing from the hip. Never worked in this market before. Not a lot of comps out there, so it's a great place to kind of exercise that double closing. So that's probably what we're going to do on this deal, unless we get to that 70. So yeah, that's cool. Cool. So what we're going to do on this call is we'll do a Q&A. I know last week there was no time for any questions, so we'll run through a Q&A. But before we do that, let's do a little round table, see how things are going. It's been about 2 weeks since we gave an update on everyone's business. Some folks that are doing deals, some folks that are getting their mail out. The way it's organized for me, I have Preston, Ryland, Michael, Colton, Chris, Cole. So we'll go in that order and then I'll go last. So Preston, take it away. Where you at, man?
Yeah, I got a bunch of mail out, got I guess about 5,000 mailers out, and the first batch is hitting next week, and it's kind of spread out over the next 3 weeks. And yeah, it's over like 8 markets in the Southeast for the most part. So yeah, exciting. We'll see how it goes.
Heck yeah, man. So those are all, you said 8 markets spread out, 1,000 pieces of mail?
Yeah.
Okay. All blind offers?
Yep, exactly.
All right, Ryland, how things going for you?
I was going to have a really good week this week, and then a buyer backed out of one of my deals that was such a pain in the ass to sell.
Yeah.
So now today I've just been putting that back on the market, answering Facebook messages like crazy. But once I sell that one, I'm going to hire a VA. That's the property sale where I'm going to start hiring. So things will get better from here. But yeah, made a couple sales and then just sending mail and then doing these double close deals.
Yeah. Any good deals coming into your pipeline right now?
I just bought one for $4,000 and sold it for $20,000 in a matter of 30 seconds.
Love deal like that. That's not too shabby. That's awesome. What channel did you sell it through?
Facebook.
Of course.
Heck yeah, Ryland.
Yeah.
Team Facebook over there. Sweet, man. Michael, how are things going with you?
Dude, today's been like a roller coaster for me. Sold my bigger Oregon lot, which is sick.
Hey.
Yeah, finally. We listed that thing at 105, dropped down. We finally accepted an offer at 60, but
what were you all in the deal at?
32.5. So still a great deal.
I'll take that all day.
Yeah. And they want to close in 5 days. So we close on Friday, which is sweet.
Close in 5 days?
Yeah, they're like,
title company can move in 5 days?
Am I missing something? Like, this thing's been sitting for 5 months and now they want to close in 5 days. I don't know.
That's hilarious. The title company's going to oblige. They'll close in 5 days.
Dude, they were ready. Yeah.
They probably got nothing else going on. That's the only deal they got. Wow.
Yeah. So closing on that one. I had a double close going on that the buyer backed out of today, which sucks. The buyer got really sick and had a bunch of medical bills. Really sad. I'm actually listing my first double close, not with Mayor, but I did reach out to him he referred a title company out in Texas, put that clause in there. So I'm gonna try it for this property, see how it goes.
What's the economics on it?
Dude, it's weird. Actually, on this call, I just got a call from the title company. It's out in Blanco County. I'm buying it for 12. I'm gonna list it for 27, which is it's normally a deal that I would just buy. But I wanted to test out his thing and see how it goes. But I just got a call from the title agent saying he can't find anything in the county. It's a weird property, like sits right on the edge of like Como County. So maybe it was recorded there. I got to figure that out. But yeah, I got that going. And then a deal that I was actually going to cancel this week that I'm buying in escrow. I just pre-sold it through Facebook. Heck yeah, Ryland. Like 20 minutes ago. So that's sick.
Nice. And what's the math on that?
It's not very well. I'm buying it for 45. I sold it for 15.
4,500. Yeah.
4,500. Sold for 15. Yeah, decent deal. But yeah, a lot of like cancellations, but then some properties that I sold that I normally would have canceled. So.
Yeah.
Decent week. Yeah.
Cool. And what we'll have you do too is if you want to just give us like the abridged version on your land investing career real quick, and then what's going on with you this week.
Yeah, sure. So I started out land investing several years ago. Let's see, 2018, 2019, around then. And started some of like the land geek stuff, the training courses and stuff like that. Started just kind of playing around with it on my own. I was going to do it as a little side business, and then just immediately went all in once I started understanding the business and business model around it. So I've been doing it pretty consistently since like the 2018, 2019 mark. And I think so, Sumner, I saw you randomly on social media somewhere, Instagram or something, and then reached out to you. Just, it was cool that we're both in San Diego, one another land investor buddy out here. Yeah. And then started listening to all your stuff and some of the figures behind your business, how you've been able to just, seems like just blow things out of the water over the last 2-year period. And then I really wanted to meet you. I was like, I got to figure out, what is this guy doing here? Figured something out. So, yeah, just excited to connect with you and get associated with everybody else in the group here. Start sharing stories. It's funny, I think Michael and Chris Bull, you guys brothers?
Yeah.
I think I just got an offer from you, Chris. Are you? I was talking to you about those St. Mary's properties, right?
Oh.
No way. Hey, Chris, you're on mute.
You're on mute. But
what's up, man?
Yeah,
no way.
Hilarious. I saw that and I was like, Chris Bull. I know Chris Bull. And yeah, we talked just a couple times about some random like properties in Colorado. So that's fun.
Hilarious.
I got your offer here in the trash can next to me. And, but that's funny.
That's so funny.
So is this like a combination? Because you guys have been doing it for a bit, right? Is this a combo? Like some people are brand new in it, some people have been doing it for a few years, or what? Where's everybody at on their timeline of how long they've been in?
Yeah, a bit of a mixed bag. I would say everyone is sub 2 years for the most part. And then we've got some folks that are like sub 6 months. One thing on a side note, you guys can't really tell. I got just a stack of offers from other land investors, man. I just throw them all in the trash. I don't even look. But it's funny. I've met a lot of these people in person. And I'm like, dude, literally, you don't remove duplicates and you send me 12 offers at once. Like, well, that's basics. Also one of the things too. So Michael's in San Diego as well. Chris is up in Santa Barbara.
Yeah, that's why I saw. That's the reason I usually just toss them. But I saw your address like just right over on Diamond Street. You mailed that one street over for that offer.
Which lot did I
You could have walked and delivered that yourself.
Yeah.
Which property was it that you got an offer on?
I don't even know.
That's funny.
Let's see here. Oh, one of the Castilla County properties.
Oh yeah, I remailed the mountains. Yeah.
Yeah, I think that's one that's just it's sold already. It's on just a finance deal, terms deal.
Yeah.
But yeah, I haven't really done anything in Castilla County in a while. It just got so crazy. And
yeah, it's probably been 8 months or so for me, but I figured I would just throw up.
Yeah.
I haven't got any deals if you want to sign that one.
All right, somebody else already bought that one.
How are things going in the immediate term with your business currently?
They're good. We've done. We're just running back through like an area that we're a subdivision in Washington that we've run through before, and just did another round a few weeks ago, sending out offers through there, and got a ton of signed sale agreements. So we just purchased like 10 of them over the last week or two, and then we've got another probably 5 to 8 more that we're working on closing. So those are good. I mean, they're smaller deals. They're like buy for 4, sell in the 10 to 15 range. But they sell immediately. Everything that we've gotten in there, like people are fighting for them and like waiting on, we got just a mailer list of people that are just waiting for the next one. So I assume those will run through pretty quickly. So that'll be nice. And then just excited to get things rolling with you over the next month or so here. Definitely interested in learning some new tricks from you and trying to really ramp things up in 2023. Definitely doing it for a while, but just kind of came stagnant. We like traveled around all of 2021, so definitely business was on the back burner, just doing whatever to maintain. But yeah, excited just to really dig in and try and ramp it up significantly for 2023.
Yeah. Just for context, guys. So Colton's in the group, but we're also doing like a one-on-one coaching arrangement, kind of taking him from like the 6-figure, 7-figure mark over the next 12 months, which is gonna be pretty exciting. And it's going to be interesting having him in the group and kind of going through and seeing the iterations and the progress. I think it's going to be a really good, ultimately like an internal case study for everyone here in terms of what's possible in a short period of time, which is exactly what I saw in my business, right? Like I was hitting these ceilings for a long time, and it's just a few subtle implementations and tweaks you make in your business. And it's like you take the training wheels off and you just go. So it's going to be really cool for everyone to take part in that and kind of watch that unfold. But yeah, man, happy to have you here. Happy to have another San Diego night. San Diego night. I don't know if that's even a term. Although I'll be leaving here in January.
I know. I can't believe
we'll have to meet up while I'm here.
Yeah, I'm gonna do some hard sales pitching to make you change your mind.
Yeah.
Las Vegas?
Dude, I mean, San Diego does that itself just by nature of it. It's a hard
terrible decision.
Yeah.
The reason
I'm sure I'll regret it. I'll be back. What about you, Chris? How are things rocking with you?
They're good. Just officially did or sold a property, just signed papers for it. So we're $1 million in sales since being in business. So a year and 2 months, we hit $1 million.
Go.
Nice.
Yeah.
Congrats, man. What was the sale like that pushed you over?
Oh, that was it was a piece of shit. Garden City in Utah.
Love it. What did you sell it for?
Sold it for 65, I think, after all fees. I had a realtor actually on that one just because I want nothing to do with Utah. So I think after all fees, it was 61. I bought it for 39.
It's okay.
Yeah.
Sold it quick, though. You bought it recently.
Yeah. I was listed for like 10 days, so it's fine.
Not bad.
Yeah, probably one of my worst like percentage spreads, but it's all right. Still like 20K, so can't really complain there. But
yeah, you can't. And I mean, the deeper I go into this business, the more I look at everything in terms of like a portfolio return. Like we have many deals where it's just like, it's not that great. But you look at the total portfolio, it works out.
Yeah, so that was nice. Let's see, just about to list 2 St. Mary's properties. Actually, they're probably a piece of shit lots. They're right next to one another, so who cares? They'll probably sell.
I tried to
where's St. Mary's? That in Colorado?
With you there. I thought he was going to go for those, but I think the utility situation there is just such a mess. I think he started learning more about it and then just isn't interested in St. Mary's anymore.
Yeah, it's good if people don't know that. So I like to sell them to people that don't know about utilities.
Real bad.
Yeah.
I drove out there like a month ago.
Oh, really?
Really?
Yeah.
No shit. Is it nice?
Some of them are nice, but the ones up on the hill are shit. Like the ones that don't
mine
have
are not up on the
utilities.
hill. Mine are actually like in a fairly okay area, but and they have utilities. It just costs like an arm and a leg to actually get them tapped into, and they're kind of steep. I looked at them with Michael. I went back and forth. 11th hour, decided to buy them. Anyway, I also just bought sent it into escrow a property in Colorado. It's a pretty standard deal. Buy for 30. So I'll probably list it for like 67. Should go pretty quick. It's in Divide, so there's a lot of demand there, Tyler County. So, but no, pretty good. And yeah, we'll end this year pretty solid. So
love it, man.
Nothing to complain.
That's awesome. Let's get you to $1 million profit next.
That's that in 2023. That's the goal.
That's awesome. Cool. How are things going with you, man? Cranking out some mail?
Yeah, I got the mail out. Same thing. Looking for more markets, but I think I'd have to look. I've got thousands out right now. I think actually mail to mailboxes is maybe somewhere I think maybe a 1,500 hit already, and then I've got it going every week, so 1,000 a week after that. I've gotten 2 calls and 1 handwritten letter in response.
Yeah.
So 3 people looking for many, many more. And yeah, I'm just antsy to get talking to some people. I want to have some conversations, and that I was wondering about like texting, and I knew I've done it for the wholesale business. But I'll ask that later. Just I was thinking about. I just want to have some conversations with people, run some numbers, get some actual deals going. Because the landscaping business is not cutting it, and so working along, searching for more markets. I think it would be cool if you were looking for more content for like the groups. If we went out to like say like on the Zoom call and found a random state, found a random market, and then it was like okay, like scrolling through Google My Maps or scrolling through Redfin, like all the way zoomed in, trying to figure, okay, here's a pocket here, pocket there, because that's something that if anyone else needs, if like enough people wanted to do that, that'd be cool, because that's something that I struggle with. And so right now I'm kind of just finding like the big markets where people are working in and then just sending out the mail just to get some mail out there, and then also searching for more for myself that I, because I want to be able to, find it myself and get good at it and be like, wow, I can't believe I found that. So yeah, looking to have more conversations and send some more mail out there. That's what I'm working on.
Sweet. And you've been getting some calls coming in, right?
Like I said, I've only gotten 2 calls and 1 handwritten letter, which he was underwater, but not really under. He bought it for 100, owes 85. I think full market value that we could sell it in that county would be somewhere around, I think about 80.
Yeah.
So that would be like, maybe a sub 2, but I'm not even worried about that right now since you guys are, creative finance is the juice worth the squeeze. Not sure. I just want to do some cash deals.
Yeah. Okay, cool. Yeah, it'll keep trickling in, and I mean we've talked about it ad nauseum. But if you have any additional questions about the market research stuff, we can touch on that in this call. I think one of the things that I brought up in Slack to you in regards to if you're going out there, I mean, the reality is over a quarter of all land sales they don't even make it online. And that's not the MLS. That's just online in general. A lot of land is like handshake agreements, neighbors selling to neighbors. And so sometimes like if we're just going after comps and whatnot, it can be a bit of an incomplete picture. So one of the things that we'll stack on top of that is going and looking at engagement. And a really easy way to do that is go and look at Zillow. Go look at the views, go look at the saves. And that can kind of be a confirmation for what you're seeing or not seeing. So if it's like, this looks like it could be a hot market, and you go look on there, it's got 12 views and no saves. You're like, maybe this isn't great, and vice versa. The other thing too is if you're ever getting to a point where you're like, oh man, I'm on the fence about this market, just call a realtor. Say, hey, look this is what I do. I'd be supplying you with listings. I'm just trying to get a read on like what you're seeing out here in terms of how quickly land is moving, price per acre, what areas are hot. In a lot of cases, like it's pretty easy to determine if a county is a good market to work in. Like that's not going to take too much work. And then it's actually from there, it's honing in, figuring out what pockets of that county are going to be ideal places. And sometimes talking to the realtors, they will tell you where to go fish, and then you can either list with them or you don't have to. But that's a really, really helpful way to get that inside information that sometimes you just can't find online. But you only want to do that once you already have like a hunch that you're onto something.
Yeah, that's what I'll do. I actually had a great conversation with the realtor out in West Virginia. And the whole thing was, I was like, yeah, I'll give you listings. Like if I'm talking to people and they want retail and they have some time on their hands and it's a nice piece of property and they, know what they got, I'll send them to you. And then in exchange, you could just run some deals by them as far as since Parcel Funders wants a MLS comps from a realtor. And then also, I think what you just added, I just wrote down, is just asking them the inside scoop of the area, this part of the state, this county, and to find pockets. Yeah. What I'm going to continue to do. And he seemed pretty excited about it because he was like, I get all these land investors who just come in here and they want me to do all this due diligence or, do some comp, and they list with the flat fee. And I was like, well, I can give you my listings. I don't know how many there's actually going to be, but I can at least refer people over to you because I see you're the #1 person in this county. He's like, cool, let's do it.
Yeah. Yeah, that's the thing. Even if you don't do deals with them, you will make a lifelong best friend out of a realtor if you give them a referral and they actually do the deal. It takes almost no sweat off your back, especially when you're first starting out, and you'll build up a lot of goodwill. And so for those deals that, even if you're just giving them the lead and they don't convert it, just put the ball in their court. Like, hey, I'm going to give this to you. Do that a few times. Dude, they'll do anything for you.
Heck so, yeah. Doing lead Sherpa for texting, anything like that, or batch skip tracing?
Well,
back text?
let's talk about that in a second. Let's run through everyone and we can go through some questions.
Cool, good deal.
Mike, certainly, last but not least, how you doing, man? You look stoic. I can't tell. I'm like, is this screen frozen? No, he's just stoic. He's just chilling.
He's locked in.
He's locked in. I think you're on mute, Mike. There you go.
Are you talking about Michael Bull or?
No, talking to Mike Lopez, talking to you.
Perfect.
Yeah.
Everything is going well. Let's see. I had a couple deals close a couple days ago, so that was pretty encouraging. I think I posted a question on Slack about a particular deal that I got a signed contract that had came in, but the people on title there was a husband, there was a wife, and there was a son. The husband signed the contract. He mailed it back in. Talked to him. He was obviously all on board, and I was like, "So your wife and son are good?" And he was like, "Yeah, they're good." And so he was like, "Yeah, she'll sign when she gets home later at 5." And she never signed. And yeah, so he texted me. He was like, "Yeah, my wife and my son don't want me to sell no more." So kind of jumped the gun on that. But I did get a phone call from another seller today, which I apologize for being late. I was trying to get the DocuSign signed.
Okay, that's more important than showing up on time.
Yeah, so I got it signed. She kind of threw a little caveat on me in that she needed to close in 7 days. I'm not really sure what exactly she's going through at the moment, but it's something urgent. So she was like, "Listen, if you can't close this in 7 days, like I got to go with someone else." So I did a little bit of comping and I got it at 11,000. Retail is around 23, 24. So, and mind you, these are infill lots. So I sent my mail for the larger acreage properties, but there's a dead period in terms of those mail pieces hitting the mailbox. And I didn't just want to stop sending mail. Yeah. So I've been, in the meantime, just been sending mailers to infill lots, which I've been historically used to. And those leads have been kind of coming in as I've been waiting for my larger acreage responses to come in. So that's kind of where I'm at right now.
Yeah, we'll go through the questions that were in the Slack channel too. If we ever don't get to them real time in Slack, we'll go through them on the call together so we can go through that one another. I want to make sure that we have enough time for that, so I'll give you guys a quick debrief on what's going on my end. Gonna be honest, October sucked. October was our worst month to date all year, both in terms of acquisitions, dispositions, everything across the board. Just not a great month for us. We had a lot of owner financing sales, which is cool, but we added about $2,000 of new monthly recurring revenue. So can't complain about that. As we're seeing the market slow down, owner financing is becoming more and more of an important tool to be utilizing. We're actually releasing a YouTube video on this next week, but we're seeing a significant difference in terms of how quickly we can turn deals if we're going for all cash versus going owner financing. We've been finance heavy in the past, but we had some deals where it's like, nah, it's just a market that doesn't really make sense for it, or the price point didn't really make sense. We've gone back and added owner financing to every single property we have in inventory because we're seeing such a drastic difference in terms of how quickly things are getting sold, which for us, like the velocity of money is more important than anything else. And one of the things that we're looking at potentially doing as well is building out like a liquidity pool of folks that want to buy notes from us. So you've got two interesting things happening, right? You've got the land market slowing down, real estate market slowing down, interest rates are going up. It's becoming a little more difficult to get financing. So offering owner financing is becoming more and more valuable for land buyers. The next thing is you've got a lot of capital that's on the sidelines, like stock market's going crazy, crypto's going crazy. There's just people that have liquidity and they don't know where to place it. And so what we're looking at doing is building out liquidity pools where people are going to come and buy notes from us. Now, there's note buyers out there that you can go and reach out to. Not really what we want. We want like retail folks that, we're going to sell them 75%, 80% of the note's value. We'll manage the note for them. So that's a way for us to free up some of this capital if we need to. Right now, it's not something that we absolutely need to do, but it's a nice strategy to have in our toolbox as I'm seeing more owner finance sales happening, and I'm seeing that to be an ongoing trend for the next, who knows, 12 to 36 months. I don't really know how long these things play out, but it's something for everyone to be mindful of here. So yeah, cash sales were super duper low. We had a deal that we sold on Monday, but then they ended up backing out. We've had a handful of stuff like that going on. We purchased 8 properties in October, sold 9. We were moving out a lot of just kind of crummy inventory. Like, I'm very risk adverse, and so if things do get worse, there's just some things I don't want in my portfolio, right? I only want the creme de la creme, the best of the best in my portfolio. So we're just kind of moving out stuff that's just been there for a little too long. Some of it we just made a little bit of money on, but wanted to get it out the door. We've got a really interesting deal in our pipeline right now. We actually got a handful of interesting deals in our pipeline. So I've been manifesting. Tell you what, I'm not even gonna get woo-woo on you guys, but I've been manifesting my first subdivide. And I had built out a mental model and have been journaling about it every day. That it's gonna take me about 6 months to do my first $1 million subdivision. And sure enough, a week later, we get a lead that comes in and it checks every single box I wanted. In Texas, I wanted road frontage on 2 sides of the property. I wanted to break it up into 10 acres and larger per each increment that we break it down into. There's a lot of exemptions in Texas. If you're breaking properties down to 10 acres and above, it's a much easier process. So for my first subdivide, I'm going to keep it as simple as possible. We get a deal that comes in 160 acres, right outside of a major metro, beautiful land. Got the road frontage. It's got power on it. Topography is nice, flat and level. We did a range offer on it. High on that range offer was 563. They gave us a verbal and said, that sounds good. We don't have a signed contract yet, but I feel very confident that we will. Right across the street, 100 acres sold for a little over $1 million in April. A lot of built-in equity in the deal, just as is. Break it down into 16 10-acre increments. Each 10 acres, super conservatively, is worth 150. Market's probably closer to like 175 to 200. We'd be cutting in about 2,600 foot of a gravel road running down the middle of the property. The reason we have to do that is we can't go like with vertical. You're gonna have to go horizontal with the subdivision, which will be nice because they're not going to be skinny lots. I think the skinny lots look bad, so we're going to cut a road in and then chop them up horizontally. And there's actually a bit of a flood zone. It's a very minimal flood zone. It's like a strand that runs through it. But if we went vertically, one of those lots would be entirely engulfed in the flood zone. It'd be totally useless. So if we go horizontally, it's just going to be at like roughly 8 of the lots are going to have a little bit of flood zone at the very front end of it. But there's plenty of setback to still build on it. We're underwriting it at like 2 to 2.5 million all out, somewhere in that range. It could be a little bit higher. We might pull power along that gravel road and then do a community well. If we add those improvements, it might be worth a little bit closer to maybe 3 million, but I'm underwriting this very conservatively just because you don't know where the market's going to be at in 6 months. This project, because it's just a simple survey and plat subdivide, wouldn't take that long. But we have third-party risk, right? Like the folks that are cutting in the roads, we don't know how long it's going to take. Pulling power, we don't know how long it's going to take. And so that's something that I have to weigh the real opportunity cost of that if the market does sour more. To cut in the road, if you guys aren't familiar with cutting roads in, I just learned a lot about it recently. Industry standard is about $4 to $12 per linear foot. So like at worst, we're looking at about 36 grand or so. To cut this road in, could be a little bit less. That's for a nice gravel road. Which that in itself adds a lot of value because at that point you can pull really any car out to the property, where those dirt roads, they get super beat up. And so it does limit the audience of folks that can buy the land, as well as showing the property becomes exponentially more difficult if you have dirt road access. So I think the gravel road in itself is going to be a pretty big selling point. For this one, we're talking to some banks that are local to the project to get financing on it. At that project cost, you can get financing that almost looks like a mortgage, 15 to 25% down. Call it like 7 to 10% interest, 25-year amortization, 5-year balloon. Pretty sweet setup. Maybe interest-only payments for like the first year. So the cash-on-cash return could be absolutely out of this world if we're only putting 25% down. So I'll keep you guys updated on that. We're super excited. It's like my sole focus right now is just this one deal. I feel very confident that we're going to get it, but I don't have a signed contract yet. But it's just funny how you start, your gears start turning, you start trying to figure out how you can make this stuff work, and then it just opportunities start showing up. And that's how it's been for my entire career in the land business and everything else that I've ever done. I just spend a lot of time thinking about it, journaling. Like I just get obsessed and then it shows up. So something that we can all implement. We've got this other deal as well, also in Texas. It's the most expensive land I've ever seen in my life. It trades for about $90,000 an acre. It's a 30-acre property. Do the math on that. It's insane. And we're trying to talk in like the $36,000 to $40,000 an acre range. We've got some traction there. He says he's got 5 other offers. I think he's bluffing. This would be an interesting play as well. I mean, of course, there's equity built into it, but right now it's zoned agricultural. I think what we would try to do is rezone it for like high density housing or commercial. It's right off of a main interstate, and there's a ton of new home builders that are building homes all around the property. It's like, if you look at it on a map, it's like all these little subdivisions, and it's like the last 2 large acreage lots, which is a slam dunk. So we'll see how that shakes out. So yeah, we've got a handful of like much larger deals that are in the pipeline right now. Sales cycles so much slower on them. It's just a totally different game. So kind of readjusting expectations and getting comfortable with that has been interesting.
Are those all like new type deals for you, or have you worked with stuff in the past where you like run utility to the property or add improvements?
Yeah, this would be very first. I have never run any improvements to your property. Yeah. And I think there's a time and place to do it when you're forcing value through subdivisions. I think for most properties, if it's just a one-off lot, it just not very economical.
Yeah.
Maybe something simple like clearing some brush or like improving a road, sure. But from what I can see, if you don't have like enough scale, like pulling in utilities for one property just doesn't make sense. But for 16 properties, it's the cost, and it does make sense. Mm-hmm. Same thing with like tapping a well. I could tap a well, have a community well for 16 lots. That's fine.
Have you rezoned anything before?
Huh?
Have you rezoned anything before?
No. I've done a lot of research on it. It's definitely something that I'm pretty fascinated by. I mean, that's a business model within itself, is just rezoning land. There's so much value to be unlocked by that. And so there's guys that just go and look at a big tract of land that's in like really metropolitan area, like maybe right in San Diego or right on the outskirts of San Diego. It's zoned in properly. They'll get it rezoned, get it pretty much shovel ready for a developer. And then they're building equity just from that rezoning, because you go through a ton of brain damage with the county. Like it could take a year, 2 years, 3 years. Yeah. So you're getting paid for enduring that pain. But once you're vertically integrated and you have the contacts in one place, it's very easy to recreate that, I would think.
Yeah.
Yeah. Okay, cool. I just talked to a guy this weekend, actually. That's his business. He pretty much he's in the vacant land game, but very different than what everyone here does. And he pretty much tees it up for an investor. So he'll rezone it, he'll do everything that needs to be done without actually putting a structure on it. And then anyway. So
it's a super interesting business. It's a very, very interesting business. It's a cool way to add value. I think anytime you can find a way to take deals that you're buying close to retail and add value, that's a really intriguing thing. And that's like what everyone else does in real estate. Land is like one of the few places where people just buy an asset and resell the asset without doing anything,
Yeah.
We're spoiled in that sense. The tricky thing is it's hard to deploy lots of capital with that business. But if you go and start doing subdivisions or you're doing the rezoning stuff, you can deploy a lot more capital. So even though your returns are compressed, it's like you're just making more per deal or per hour of your time, even if you want to look at it like that. There was a guy that I listened to probably about 2 years ago, and they were doing 8 figures a year just from rezonings. But the thing is, it's so different than the model we operate in, because one project can take you 3 years. And there's a lot of risk in that if you only have one egg in your basket at a given time. I mean, that's so different than having 40 properties in inventory like we typically do, right? So it's just a little bit different. But I think slowly stacking that stuff on. I'm more keen on the subdivision stuff because it plays so nicely to what we're already doing. I don't really have to change our model. We're just taking a larger tract, breaking smaller increments, and then put it kind of into our disposition pipeline, and then just it gets sold by our team. So I'm really keen on that stuff. But while we've got everyone here, let's run through some questions. So if anyone's got any questions, let's kind of go through them.
Yeah, Sumner, I was going to ask you about texting. If so, you're getting data from Data Tree, because that's like the number one thing. I think that was like 10 cents a lead, 7, something like that. Would you recommend just putting it into like before with texting I've done? I think it was Lead Sherpa. Texting is a big one, and there's some other softwares. What does your process look like for cold texting these people, or just kind of referring to the mail you already sent them to pick up?
Yeah. So this is something that we are going to be rolling out eventually to the program. I don't know exactly how we're going to structure it, whether it's like a separate course in itself, because you could go a mile deep on this. And I've been spending the last 10 months going a mile deep on it. There's still, I feel like, a lot I don't know. And so we just made an interesting change in our business that I'll touch on here in a second, which kind of plays into texting. But one of the things about texting is I forget what the acronym is for the laws around it, but the laws are super gray. Want to really be careful. So I looked to a whole bunch of providers out there for texting. Most of them did not follow the TPA. Is that the guidelines?
TCPA, Telemarketer Consumer Protection Act. It sucks.
TCPA, yeah. Okay, so I want to pop this into the chat for everyone. So we use a platform called Launch Control, and Launch Control is fascinating because it essentially puts guardrails on what you can and can't do. So a lot of texting providers send as much text as you want, text people as many times as you want. Launch Control is a very set protocol that you cannot deviate from that keeps you super safe. So like the texting threshold is very low. You have to create multiple variations of every text and then have multiple variations of different texts. So when they send it out, there's so many, like one text message could have like 5,000 different variations, because you have word variations, you have text message variations. And so the carriers don't get flagged by saying, hey, this guy just sent 3,000 of the same text messages. So there's a lot more of like a heavy lift that goes on your end. You can't send as much volume, but it keeps you on guardrails, which I like, especially if you have a team. I think there's real risk that your team does something silly. And so we use Launch Control exclusively. I would not advise using any other platform. I have no affiliation with Launch Control, but they do a good job, and it allows me to sleep easy at night. And it's super affordable. I think our plan is like $750 a month. And that's like the top tier plan. So with texting, it is a beautiful way to reach people. What we've learned with texting, so obviously it's substantially cheaper, cost per lead, cost per contract, it's all cheaper. But more than anything, you reach a different cohort than you would with your direct mail. We get in touch with two totally different personas of landowners, even with the same data set. So what we used to do is we would send mail, then we would follow up with a text and say, hey, did you get our mail piece? And that seemed like a good idea because at least we have a talking point to text them about. Now what we're doing is, and we just made this change 2 weeks ago, we pull our data, we send a text first, then after 5 days, anyone who hasn't responded, we go and pull that data, then we mail that data. And then in 30 days, that list in Launch Control gets texted again. And so let me kind of walk you guys through what our framework looks like. It looks like, okay, so day 1, you have a text. Day 14, we have a letter. Day 30, we have a follow-up text. Day 45, send differentiated letter. Day 60, text list again. So this is the new strategy that we're implementing. It's a little more advanced in the sense that we're doing a lot of remarketing to the same list. I don't know if that's where I would start if I was just getting into the game. But I think one of the issues that we've run into is like we've been casting too wide of a net. It's actually going to be more beneficial for us to recycle the data we have and start building a reputation in these markets because we're going after bigger deals. The sales cycle's longer. I think more brand awareness, omnipresence, showing up on text, showing up in multiple letters will play well for us. At least that's the expectation. So this is why I haven't built out any training around it, because it's like still very much something that I'm iterating on and trying to fully flesh out. But all in all, cost per lead and cost per deal is much lower with texting. But I wouldn't exclusively text. Like I just wouldn't exclusively mail at a certain point, because I've noticed you're reaching two different groups of people. The nice thing though is by texting first, we can actually substantially reduce our mail cost by about 20 to 25%. We get about a 20 to 25% response rate. There's no need to mail those people. And currently we've been mailing those people. So it'll shave down our mail cost a little bit. To be honest, for where you're at, I just think that simplicity is your best friend. I don't know if I would try to stack on more variables. If you really want to, you could experiment with it. It's not going to cost you that much. So it's up to you, but I would still continue to get your mail out nonetheless. Mail is still tried and true in our business, even though we text substantially. Mail still is what works best for us.
Okay, I'll see where I'm at, and I just want to, let's say So I got the CRM. I followed everything in the course. Say someone responds, how do I not market them in the future? Is there a way to update your list? Are you pulling the data of the people in your kind of Rolodex on, I forget what the website was called, Follow Up Boss?
Yeah.
How does
So there's no, I mean, everyone's got a different way to go about it. Some people use a platform called Pebble. They'll upload all their data in there. We don't do that. So we use just Follow Up Boss in Excel. We use Follow Up Boss for dispo and acquisitions. The way we do it. So if I go and pull data in North Carolina, right, and then I go pull data there again 6 months later, we don't have a good system for that. But if I pull data in North Carolina now, and then I use that same data and remarket to it 6 months from now, and I'm using that same data set, what my team does is they go into that Excel file, and every single person that reaches out, they highlight them. So if I recycle that data, I can remove them, which is wise to do. But if I go and pull new data, I don't have a good way to cross-reference it. So some people will use Pebble when they like upload their data set into there. For us, I just don't think we need another CRM. And really what I'm trying to do is pull less data and use our data better, right? Right now, we're casting so many lines in so many different directions. I don't think it's beneficial for us. And so that system works pretty well for what we're doing.
So it's possible that people you've already had a conversation with or bought their land, if you repull that market, they're going to get if like they're still on the data or somewhere. Right. You think instead of trying to find every person you've talked to, and when you remarket in the future, it doesn't matter if they get another letter because you just want to simplify it and just all go through.
Yeah, I mean the thing is like I would never pull data for a data set that I already have currently unless it's like 6 months plus or a year out, right? So in that example, if I already bought someone's property, those records should be up to date, and I shouldn't be pulling data from people that I already bought land from. People that I've already had a conversation with, that is a risk. But again, if I had a conversation with them and we didn't buy their property, well, maybe it's worthwhile reaching out to them again, right? Sometimes you get some real sour people that are like, they're really upset.
Yep.
Those people, we try to make sure that we do a good job to remove them from any list ever. We just don't reach out to them. But I still think, unfortunately, some people do slip through the cracks. But really what I'm getting at is like, we're trying to just kind of continue recycling the data that we have. We'll probably update it annually. But right now, we've just been so all over the map where we're just constantly pulling new data. So that we're going to kind of remove or just lessen.
Yeah.
Yeah.
Cool. That makes sense. Yeah. Highlight on Excel, take out the people who are big risks, and yeah, just keep it simple. Understood. That's what I'll do. I need to focus on talking to people anyways, not that. So. Yeah.
Anyone else?
I am curious, just as far as like the group as a whole. It's everybody around that same type of general area with your like acquisitions in like the $20,000 to $50,000 range. Is that pretty much what you teach, to be up higher in there instead of doing any of the kind of lower dollar deals, or what? Does it just vary?
Yeah, I would say the general rule of thumb, typically what we encourage is like acquisitions target somewhere between 10 to 75, somewhere in that range. So like, you heard some people talking about deals that they bought lower than that. So they certainly do happen. And we still buy deals that are lower than that 10K mark, but usually those are deals that we're not actively marketing to. We get someone that reaches out to us and we say, hey, we offered you 10, but this is actually worth 5. And so that's how we typically end up with the smaller deals. But yeah, for the most part, everyone's, I would say, is mid-tier. To me, it's the model that makes the most sense, especially when you're first starting out. It's the highest use of your time. There's a ton of supply out there that are easy to target. Like if you're going after $500,000 deals, the data is very limited. There's just not that many deals out there that kind of fit to that price point. So plenty of data to go around. They're pretty much prevalent in every single state, and you have the biggest audience of potential buyers for them, which is helpful. So I'd say pretty much everyone here maybe has a few.
I did the low end deals for probably the first 6 months of my business, and it was a grind, such a grind. Doing the higher end stuff like propelled my business tenfold. So I strictly stay like Sumner was saying, sometimes I'll get a cheaper deal, like the one I actually just sold. If I'm mailing like a $20,000 kind of range set of data, there's always going to be like little outliers here and there, and there happen to be one. But yeah, going for like minimum 15 to 20,000 propelled my business so much.
Yeah, and I think that's probably going to be the biggest benefactor for me moving forward. A lot of it has been like self-funding my own deals, which I know is a huge crutch, and it's like holding me back. So I was curious, just I mean, obviously, I know some of the modules and stuff discuss third-party funding, and Sumner, I'm sure we'll get into that. Is everybody using some sort of third-party funding for their deals?
Yeah, the first person that funded my deals was Parcel Funders, so I think Sumner references in the course. They funded my first 2 partner deals. That too, I think, changed my business. It was like a whole new door. Now I just kind of fundraise other money. So now I have some other like family members or family friends that will fundraise deals. But Parcel Funder is my first one, and now I'll almost only have people fundraise deals. For me, it's just I didn't like the risk of my own capital going into deals. I still will buy deals. I will, but I try and have almost every deal I buy be fundraised now.
And then if you're selling those on terms, if you're doing finance deals and they're more expensive properties, maybe like, pretty long drawn out finance deals, what kind of, do you guys have like specific parameters that you try and set up with your investors?
Sumner could probably attest this more. I just don't do finance. So if somebody wants to do finance, I'll refer them
to financing.
Not anymore. I did. I used when I bought it myself, but if somebody is fundraising the deal, I just don't offer it. I'll refer them to companies like Prosper or Fund and Grow where they can possibly get a loan, but I just won't offer it anymore.
Yeah.
But Sumner can probably attest because I think he's done.
Yeah. So first and foremost, I mean, we always want to set expectations correctly. So we always talk about this with anytime we're going to partner with someone, so they're aware. It's only applicable if you're doing like joint venture stuff. The beauty is if you're raising debt, this is not a concern, so long as you have an ample timeline with the debt. So for us, we talk about it up front. We typically set our down payment either at their basis or like as close as we could humanly get it. And so usually the folks that are accepting the terms are very favorable for us and the partner. Typically, like if we're in a situation where the terms just don't make sense, like we would rather just kind of move the capital, sell it for a small profit or even break even, opposed to taking terms that are crappy for the partner. We would rather just go to recycle that into a new deal. So like if we have a deal that we bought for 20 grand and someone's offering us 5 grand down for the terms, I mean, it's just like, that's not worth anyone's time. It's because some folks that do the JV stuff out there, they will split the down payment with the investor and with the operator. We don't do that. We give the full down payment to the investor, and then we'll from day one split the proceeds, whatever our arrangement is. So just going to follow
to the investor, then split 50-50.
Yeah. Well, it depends on what your arrangement is. Yeah, it could be 50-50, could be higher, and that 50-50 is going to be like the low end that you'd see, but kind of whatever agreement you have set up with the partner. Trouble is you got to manage the payments, which is kind of annoying. Like it's a bit of a kind of clerical headache, kind of managerial headache to stay on top of everything. People are late with their payments. You know how the owner finance stuff is. Yeah. So it can be a little bit of a nuisance. And then if you have to go and remarket the property, what do you do at that point with the down payments? Like what we'll do is the terms are going to be so it's very, very favorable for the partner. Or in some cases, if we have, and this has only happened like once or twice, if we do accept terms on the deal, sometimes we'll just buy the partner out and we'll just give them like a 10, maybe 15% kind of bump on top of the purchase price. And most of them are fine with that, right? And so like if the math is like, hey, it's a term we feel comfortable having in our portfolio, but the partner doesn't, we'll just cash it out. We've done that. I think we've done that twice now. But yeah, for the most part, if we look at the breakdown, I mean, we probably have like 10 owner finance arrangements with partners. It's very minimal compared to the rest of our owner finance portfolio. And usually those ones that we have gotten, they're home runs. Just makes a lot of sense. Yeah. So usually what we try to do is the same math for us, right? Like we want to get the basis back in 12 months or less. So if their basis isn't back in 12 months, we're probably just not going to accept that deal. It's just not favorable for them. And ultimately not favorable for us too, right? Because like the more liquidity they have, the more deals they can fund. So we want them to have the reserves to fund their deals.
Yeah, that makes sense. I mean, I just thought it was interesting because all those finance deals, I mean, as far as an investment standpoint, it's a great investment. But stacking those one on top of another, and then you run into cash flow issues very, very quickly, especially if the terms aren't right. I mean, like, a lot of the marketable terms out there or other land investors offer like such low down payment and monthly payment. And I mean, obviously everything depends on what your purchase price of the property was, but that was just one thing that I was curious with scaling up and negotiate or bringing on outside funding or other investors, just sort of what some expectations are, what some structures that you guys have used to, not make it to where like, okay, you'll break even in 4 years and then
Here's the thing too.
through 10.
We'll talk about this in greater detail in our calls, but
Yeah, sure.
for where you're at in your business and the way you've structured your business, just in terms of how many terms that you have, debt just makes sense. You've got the track record to go and raise debt. Debt's going to be on a 2-year term, kind of as a minimum, could be a little bit longer. I don't think I've ever done an owner finance deal where I don't get my basis back in at least 24 months. I think maybe the most is like 16 months or something like that.
Yeah.
So if you go get $1 million, $2 million, you go and deploy that, you're sitting pretty. You're building a really sizable note portfolio. You're going to be able to return capital and pay the interest just fine. Because most of the deals we're going to do are going to return capital in 6 months to 12 months, and then you're just getting income from then on. So I'm a little more keen on, like, if you do want to keep on doing the owner finance stuff, which I think is becoming more and more important. I think over the next, call it 1 to 3 years, however long this kind of hiccup lasts for, it's a really important strategy to be offering. That if you're just a cash seller, you're going to be hurting, I think. And so that's why I think debt is a really important thing to have in your tool belt currently, or it will become more important. It's not important just yet, but at least getting the wheels turning there is wise to do now.
Yeah, I think definitely just a combination of the two, or just kind of letting the market decide. Not just pushing strictly.
Oh no, we always offer both, right? Yeah, we'll let the market decide, but we always want to have terms there.
Yeah,
and people have become so jaded over the last 2 years because it's just like this influx of cash. Everyone was buying properties for cash. It's like, A, that's not how the land business has always been, and B, we're going to kind of come off that high, and there's going to be a pretty healthy dip. And so I think with inflation, with interest rates going higher, with just overall less buyers in the market too, it's like we really got to stand out. And so I think there's some of the ways to do that is like you got to be an A player. You got to be phenomenal at your craft. Your marketing has to be dialed. Your customer service has to be phenomenal. You really have to be differentiated. And on top of that, you should be offering terms. And I think those are 2 ways that like you can stay in this business and weather any storm.
And then the selling your notes, like you were referring to, that's something that's interesting. I looked into a little bit in the past, but never really moved forward with any of those. I've done, maybe with friends or family or something like that, push one off, but didn't go with any of those like note selling companies. I'm just curious, have you looked into, like what your terms or stipulations would be on defaults for those?
Yeah, so wouldn't go with I personally wouldn't go with a note buying company unless I really had to. I just feel like their terms aren't great. Like they do what we do, right? Send out mass solicitation, try to get great deals. So what we get a lot of folks that are like, hey, we see what you're doing. We'd love to invest with you. Friends, family, colleagues, strangers, whatever. Okay, you don't really have like the capital requirements, or it just doesn't really make sense, but you want to get involved in what we're doing. Cool, we got this $30,000 note. You could buy it at 20 or 25. We'll manage the note for you. If it defaults, we'll relist it, remarket it, get it sold for you. So we'll do all of the actual lift, just as if it was still in our portfolio, which I think is a really user-friendly solution for a lot of people. And where can you get a return like that right now, backed by real estate? It's a phenomenal setup. And I think we could probably get 75 to 80% of the note's value pretty easily. A lot of like the professional note buyers, they want like 65 to 70%. I think if you're going retail and offering that service, you could probably bump it up a little bit because it's just a total hands-off setup for them. And so at 75 to 80% of the note's value, you're at your same cash price or slightly higher, right? And so it's a really cool way to get some liquidity in your business, especially when you have like this perfect arbitrage going on where it's like more people want notes, less people are investing in the stock market and crypto, all capital. It's just like it tees up so nicely. So that's something that we've been actively speaking to people about. It's like, hey, no, the tough thing is you need a lot of people, unless you have someone that's just like Daddy Warbucks and they're like, we'll buy your whole note portfolio. That probably doesn't exist. You probably need like 10 people that each put in, 50 grand, 100 grand to buy some notes. So you definitely got to shake some hands, kiss some babies, and get out there and find the people. But it's a really interesting strategy right now. I think it's just a cool business model in general. because
Yeah.
now the caveat is, of course, you've got to season the note. So you typically can't just go turn around and sell the note immediately. So that's the caveat. But the plus side is like, well, I was just at a conference for land. Most people said that their cash sales were taking anywhere between 3 to 5 months to sell right now, and their owner finance properties were selling in about a month. So pretty big disparity there. You can get that down payment, so you get that capital injection in your business. You can go and redeploy that, and then in 2 months go and sell the note. So it's like it's about the same or slightly less than what it would take to sell a cash property, and you're getting liquidity in day one. Might not be your whole basis, but it's something that you can go and redeploy. So I think it's a pretty intelligent solution. So something we're actively looking into. Yeah.
Yeah, definitely. I mean, that's definitely one of the best parts about the land business is how you can just keep getting creative with whatever. You just have all of this value. You're just creating all of this value. You can play around with the numbers and, move it around so that your cash flow works. But you just gotta start getting creative with it and
start getting deals in your pipeline. You can only get creative when you got deals in your pipeline,
Yeah, exactly.
And I think for me, I'm more bullish on the idea of raising a lot of debt, building a really big note portfolio. I like notes. I mean, if I had it my way, I would live very frugally and just build a $50 million note portfolio over the next 20 years. Like that to me seems really doable, and I like that. The way to get there, I'm like, just go raise $5 million, 5 years on that, go and deploy that over and over and over again. You're not far off from that mark. And so really, like, I would only sell notes selectively. I don't know if I would want to make it my bread and butter model. I don't really need a lot of cash in my life. I would rather just be building those note portfolios. I love notes. I think notes are awesome.
Sumner, what do you think about going in, buying properties on seller finance so you can get somewhere close to zero down and then an interest, for an example, and then go ahead and sell it on seller finance, have it like, $5, 10, 15, $20,000 down payment, whatever it is, and then sell it at like 5% interest, something like that.
Yeah, I mean, that's one of the strategies where like you say it on paper and it sounds freaking awesome. The reality is like most owners don't even understand what seller financing is. So to go and explain that to them is going to be really difficult. To get 0% down, also going to be really difficult. It's out there. Like, I'm not saying this couldn't happen, but it's going to be a lot of people you need to talk to until you get someone that says yes. Now, it's one of those things, again, where it's like tool in your tool belt. You have a deal. It looks like it could pencil. You can't find numbers that work. Then, pull that tool out and exercise it. But I don't think I would exclusively build a business around that. The other thing that I don't like is that, like, in the event of something terrible happening to you and you default with the original seller, you're essentially defaulting on the person that's financing from you. And so, like, I think you do open them up to a little bit of risk. Your name's not on title. Sometimes that can come up and people can get a little bit fishy about that. Now, again, I always talk about, like, is the juice worth the squeeze? Now, if I was going and buying 600 acres on owner financing terms and subdividing it and selling them off individually, juice is worth the squeeze. If I'm buying a $40,000 property and owner finance it, I'm like, just the risk, the time, the head, it's just not worth it. But if it was at a big enough scale, sure. But I still have trepidations. I have a friend that this is his whole business. He just goes out there, owner finance big properties, subdivides them, sells them off. And he does great, but also, like, I don't know, man. I just don't know if I would sleep easy at night knowing that every single month I got to pay out 60 grand every month. And if anything shifts with your borrowers and your cash flow tightens and you can't pay those people, well, then someone that's financing from you might lose their property. I just think that, like, I don't like having so many parties involved. I'm a little more old-fashioned. I'm also pretty risk adverse, I would say, ultimately.
Dude, me too. I'm just trying to think of, like, my ideal. I got into the business thinking cash sales all the way. That's what I need. I don't have a big, chest of cash right now. I want to build that up with cash sales and then do seller finance and selling it on terms in the future. So I'm just trying to think of things I can bring to the table from the very beginning to where I can get, like, lump sums of cash instead of selling everything on terms.
Yeah. I mean, again, it's like it's a worthwhile thing to have awareness around, to bring up potentially in a conversation. I think your head's in the right place. And I think it's an interesting strategy. And I know people that have pulled that off. To me, I also am a fan of, like, very repeatable, systematic things. And it's like, I just not very repeatable or systematic, but it's definitely something to be aware of. Right. But if I were you, I'm like, what's systematic? Send a lot of mail, get some deals that have a healthy spread, send them off to a deal funder, go make 50 grand, 100 grand, 200 grand, and then figure out what to do. And if you put your nose to the grindstone, you could do that in the next year or less, right? Like the model's already proven there. To try to reinvent the wheel at this point, I just don't think is in your best interest. I would just say, hey, let me do what's proven, and then from there you can kind of get more creative liberty. But I would just kind of stick to what you know works.
Right.
Yeah.
And 3 to 5 months, it might still take that. So it's just going to be a lot of more shifting and adjusting, talking to the funding company as the market probably, keeps going down. If I'm only, cash buy, cash sale, I'll just have to do more marketing in order to stay afloat.
Yeah, more marketing, or find deal funders and make new arrangements with them. Pitch. I mean, there's so many ways to skin this cat. Like working with the parcel funders they're awesome, but they've got a set business model. But you go find Joe Schmo and you explain your business model and say, hey, we're going to do owner finance deals exclusively. You'll get monthly cash flow. Dude, tons of people would be keen on that, right? And so like it's kind of like what Colton's saying. It's like once you have the value, once you have the deals, you can go get so creative and design this however you want. And so like if I were you, what I would focus on now is more mail, talking to sellers, getting some deals done, dealing with parcel funders to start, then branch out and go find people that you can go and get debt from, or do JVing agreements, but something that's a little more bespoke to what you're trying to do, or where the market's at. Like parcel funders, they've got a set order, and it's great when you're first starting. But those are like the two biggest levers that'll have the biggest impact in your business: is raising capital and mailing more. That'll drive your results. All right, guys, we're a little bit past time here. Chris, what are you gonna say?
No, it's all right. I can wait until next. There's tax questions for those that have been in it for a little while, but I can wait till next week.
Okay. Well, it's great seeing everyone. I'll see you guys in the Slack group. I'll see you guys next Wednesday as well. Next Wednesday is going to be another Q&A call, so bring your questions.
See you guys.
All right. Good meeting everybody. See you guys.
Yeah.
See ya.